Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. Our focus this week is on Nigeria's Q3 2025 GDP, steady momentum amid sectoral shifts. The National Bureau of Statistics last week published a third quarter gross domestic product GDP report, which showed that Nigeria's economy maintained a positive trajectory in the third quarter of 2025, with real GDP expanding by 3.98% year-on-year, an acceleration from the 3.86% recorded in Q3 2024, though moderating from robust 4.23% in Q2 2025. This performance reflects sustained non-oil resilience, offsetting a slight dip in oil production amid ongoing reforms in fiscal policy, digital infrastructure, and agricultural support. Nominal GDP rose to 113.59 trillion naira, marking an 18.1% year-on-year increase driven by inflationary pressures and currency movements. The non-oil sector, making up 96.56% of real GDP, grew by 3.9% year-on-year, up from 3.8% in Q3 2024, while the oil sector increased by 5.8% year-on-year due to improved efficiency, despite average output declining to 1.64 million barrels per day from 1.68 million barrels per day in Q2. The services sector led with a 53% share of GDP and grew by 4.2%. Agriculture remained stable at a 31.2% share with 3.8% growth, and industry contributed 15.8% with a 3.8% increase. These numbers highlight Nigeria's significant strides towards economic diversification, supported by a resilient naira and stable energy prices despite ongoing security challenges in its agricultural heartlands. Top performing sectors, drivers of Q3 2025 expansion. The third quarter's growth was driven by a combination of a sustained services expansion, agricultural recovery, and industrial stabilization, with non-oil activities contributing most to the rise. Key subsectors showed double-digit gains, especially in transport, logistics, and financial services. 1. Finance and insurance stood out, increasing 19.6% in real year-on-year terms from 4.3% in Q3 2024 and building on Q2's 16.1%. Financial institutions drove 87% of the sector's output through recapitalization and digital lending booms. The sector's share of real GDP rose to 2.7% from 2.3% a year earlier, although it remains slightly below 3.2% from Q2. Resilient intermediation amid high yields and rising fintech adoption likely supported growth. 2. Transportation and storage grew by 9.9% year-on-year, decreasing from Q2's 22.1% and 10.1% in Q3 2024, with road transport leading thanks to logistics recovery and AFC-FTA trade flows. The sector contributed 0.69% to GDP, up from 0.65%. 3. Arts, entertainment and recreation notched 9.1% year-on-year growth, an improvement over Q2's subdued pace driven by post-pandemic tourism revival and creative content exports. 4. Mining and quarrying, encompassing oil, expanded 7% year-on-year. However, this was a moderation from a 20.9% growth in Q2 due to the weakness in oil production to 1.64 million barrels per day from 1.68 million barrels per day. 5. Information and communication sustained its growth momentum at 5.8% year-on-year, down from Q2's 6.6% and 6.8% in Q3 2024. Growth in the telecommunications subsector continues to lift the entire industry, driven by broadband rollout and data services. The sector's GDP share rose to 9.1% from 8.95%. 6. Construction advanced 5.6% year-on-year, up slightly from Q2's 5.3%, building on public works amid housing and road projects. 7. Electricity, gas, steam, and air conditioning grew 4.6% year-on-year, moderating from Q2's 11.5% due to seasonal demand. 8. Agriculture's 3.8% year-on-year growth, rebound from 2.8% in Q2 2025, was driven by a sustained expansion in crop production by 3.9% from 3.3% in the prior quarter. 9. Real estate continued its slowdown as growth moderated to 3.5% year-on-year from 3.79% in Q2 2025. Meanwhile, trade recovered with a growth of 1.98% from a low of 1.29% in the prior quarter. 10. Manufacturing sector growth remains lackluster at 1.25% compared to its performance in the first two quarters. Collectively, these high-flying spanning finance, utilities, logistics, and digital services accounted for over 60% of the quarter's growth, underscoring a shift towards knowledge incentive and infrastructure-led expansion. Outlook: gradual uptick toward full-year targets. Nigeria's economy is poised for mild acceleration with a forecast of 4.22% GDP growth in Q4 2025, lifting full-year expansion to 3.92%, surpassing 2024's 3.38%. Non-oil sectors, particularly services contribution at 55% of growth, will lead, with ICT and finance sustaining 6 to 7% growth rate amid broadband targets. Oil outputs aim for 1.7 million barrels per day via OPEC Plus adherence, supporting 6% sector growth, while agriculture could hit 4% with harvest peaks and irrigation scaling. Headwinds include fiscal pressures, a deficit of 3.8% of GDP, and oil price swings $75 to $80 per barrel, but tailwinds from AFCFTA duties and green hydrogen pilots offer some cushion. Q3's balance vigor signals a maturing recovery, with real GDP eyeing 250 trillion naira by 2026, nurturing diversified job-rich growth if reforms hold firm. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week. Bye.